All right, welcome everyone. We're going to start looking at the stock market charts using technical analysis to really help us find patterns and trends, reversals, everything that you're looking for to potentially help you trade and find trade ideas. So if you're new to the channel, give me a thumbs up. Let's get right into it. We're going to start out today looking at the dollar. So recently, my video yesterday, I said we had a sell signal in pretty much the S&P 500 and the tech sector, the triple Qs. We'll look at that here in a second. That sell signal still stands, but the dollars, we're not seeing a pop in the dollar. And so the thing is that you would expect to see some sort of a flight to the dollar if you're going to get continued selling. Now, we might just be kind of holding out and waiting, but we don't see it yet. So that's the point that I want to make. We still have bullish divergence right there in the daily chart on the dollar on the RSI. See the divergence? It's right there. It's bullish. We still have, looking at the PPO, a bullish crossover right there. That has not been negated. We're kind of pointing down a little bit, but still a bullish crossover there. And we still have a bullish falling wedge pattern right there. You can see the wedge making this trend line here and then this lower trend line here. So we're just inching lower, making divergent lows is what we keep doing. Today's another divergent low. You can see right there. But there's no, we still don't have that reversal or breakout or any kind of buy signal in the dollar. And that's really what I'd be looking for. You also can probably make out a kind of a short-term daily trend line, something like that. If we look at the hourly, that probably lines up well. Yeah, you can see lots of reactions there. So we can use that as potentially as a breakout point. If we get some sort of a bullish breakout, that could be the buy signal, but we just don't see it. It's not there yet. So could be, we might grind around here for a little while before continuing to the downside. Gold also is continuing to the upside. I mean, I don't see anything bearish in gold right now. I see just bullish price action. The only thing that's potentially bearish with gold is the fact that the dollar has some bullish technicals. It has bearish price action, but bullish technicals, momentum technicals. So maybe if there is going to be a reversal in the dollar and the dollar is going to start to rise, then pressure will come into gold. That's what you'd expect. However, I've seen gold and the dollar rise at the same time. So sometimes, I don't expect there to be the liquidity event that we saw in the past with gold. So let me show you guys an example. On the daily chart back here, this was the COVID drop, and this was forced liquidation in gold. I said it at the time that I was adding to my miners down here when I owned Barrick Gold. And I also owned Agnico Eagle gold mining companies. And I added to those positions on this drop because it looked like forced liquidation where everyone was getting liquidated out of their positions and they were being forced to sell their gold stocks. Even though they might not want to, they were being forced to come up with the cash to make margin calls on some of the other positions. So that's what that was. And sure enough, gold, obviously rallied from there. And so, if we're going to get, if there is going to be a flight to safety and the markets are going to sell off, then gold might catch a safety bid. It might not be, the same forced liquidation sell off. And you might see more of a flight to safety in gold where everyone's rushing to buy gold as a safe haven. All right. And that's what the chart tells me that it's going to happen or likely to happen. Gold, as far as I can tell, I'm seeing just strength right now. So keep an eye on that. Let's look at the triple Qs. Here's what I've got going on right now. It looks like a bear flag. This is the sell signal from this bearish rising wedge. So here's your bearish rising wedge right here that the Qs made. And if you look at and then we had the sell signal right there. So there's the breakdown. And now we've got what looks to be flagging action. So what I'm looking for is a break of this lower trend line right here, some sort of a breakdown, impulsive hourly close below that. You get that hourly close below that flag, and then you're likely to continue to the downside, continue the flag down. And, we've got some support. Looks like there's some support. I mean, there's potential support right here around 303, 302. It's not the cleanest level of support. There's actually a better level of support down here around 298, 300. You can see here, tag of resistance, held resistance there, support right through here, support there and there. So I like that one because it's got more reactions. So looks like it's going to break down, but again, you got to wait for that sell signal. Same deal in the S&P 500, the SPY. So here's an hourly chart. We obviously had this bullish price channel, upward price channel right there. We broke once with a false breakdown. Again, this was during holiday trading. We're now into the first of the year, so we've got more market consensus where you have market participation, larger market participation, institutional trading basically. And we had a sell signal yesterday. That sell signal is still intact. We do have a bear flag right now. So again, what I'd be looking for is an impulsive breakdown. We might not get it today. It might come in the form of a gap down. I'll probably take a shot at that towards the end of the day. If it's going to break down, it could come in the form of a gap down. So in overnight trading, and we might take a shot at a gap down playing out. This one, if you look at the daily, tells me it's going to go down because of this big negative divergence that's been really in play for quite some time. So the negative divergence tells me we're likely to continue lower, and this is not just a buy the dip opportunity, but I believe that we're likely to go somewhat lower. I don't know how low. We'll have to kind of mark out some levels and just see how the charts play out. But as of right now, momentum is down, and yet price is up. So price moving higher, momentum telling me that a trend reversal is likely. And we got a sell signal yesterday. So I think we continue to move lower. Let's look at bonds here. Bonds aren't telling me, that we have there's some contradiction basically across the markets. Now, understand that this is TOT. This is your long-term treasury bond, which is often a flight to safety in market sell-offs. People are rushing to bonds when there's sell-offs, and then they'll rush back into equities when it's risk on again, basically. But I'm not seeing any signs right now that they're buying bonds. Basically, we're down 1%. I don't have a position in this. I'm watching it down 1%, and it's price continues lower, so might not be ready to make its move. However, clean bullish divergence in the daily chart. So we do have bullish divergence. We are making, we haven't made a new lower low, so this is not a divergent low yet. A new low below this. It's about 154.75. A new low below that would be a divergent low if it happens anytime soon. So momentum has been building to the upside, telling me a trend reversal is likely, but we don't have any buy signal. There's no trigger or big bullish buying catalyst right now. So it could continue to just grind lower and continue this divergence for a little while. Let's look at energy, XLE. Energy's catching a bid today, up about 6%. Again, I'm seeing a lot of signs in the market that the market's basically expecting inflation. That's what all the various charts that I'm seeing is telling me. Doesn't mean we're going to get inflation, just means that the market's expecting it. And that's really, the reality is that that's all it takes. It doesn't really matter if you get inflation or not. It just matters if the market's expecting it and starting to price it in. And that's what I'm seeing right now. So XLE obviously catching a bid. However, I don't see a setup here to buy this thing yet. What I see is we did have a negative divergence here on the daily chart. So it's right there, showed up right about there. And we did get a pullback. And that was a drop of about 11%. So that might be enough to satisfy this negative divergence. And now we're going to turn up. That's possible. But what I'd like to see is this negative divergence really start to get burned through before saying that we're bullish on this thing yet. If we run up and make a new high around this 42.26 anytime soon, it's just going to continue this negative divergence. It's going to just extend it. So likely I'd be more interested in being a buyer in XLE and energy stocks down around this 34 area with bullish divergence. Right now we don't have bullish divergence. We have negative divergence or bearish divergence. So I'm going to continue to watch this, but what I'd expect is, maybe we run up, make a slightly new high above 42, roll over down, continue to roll over down to about 34, start to put in bullish divergence down around that area, and then that's kind of going to create a longer term base of support before turning up. So Apple's at support, and this is why the tech sector is not breaking down yet. Really, for a more confirmation, you would want to see Apple break this trendline support. So here it is right there, trendline support on the daily. We roll down to the hourly, you can see it. Apple's just been walking up this trend line. An impulsive break and hourly close below that would give a sell signal on Apple and probably, and likely confirm additional selling in the tech sector as well. Looking at Apple, we have negative divergence right there. So it's cleanly intact, telling me we're going to break this trend line. But until you do, there's no sell signal on Apple. And the tech sector is likely to not go much lower until you get that sell signal. So I think, if you wanted to be more conservative and prudent, you could wait till you get that sell signal in Apple before taking a short position. The charts tell me we're likely to break down, and Apple's got that negative divergence. Also, you look at the PPO, we had a bearish crossover right there yesterday. So it looks like we're gonna get it, but it's not there yet. This is that corn I was talking about, and obviously, I talked about we have bullish divergence in corn. We had it back down here, all the way down here. And then I had this trend line right here. I was kind of waiting for this trend line to break out before adding to it. So here's the breakout right there. And also I pointed out it'd be nice to see continuation this week. And we are seeing it so far. So the market continues to buy this corn ETF, CORN. To me, it looks like we're starting a new bull market because this was the bear market going back to 2014. Really, the bear market started back here in 2012. So about an 8-year bear market in this corn, and just this clean downtrend. I drew this benefit of the doubt trend line right here, where it basically had 3 reactions, because we did get another reaction right here, and just a nice solid breakout. At this point, I'm treating it like we're entering a bear market, and so what I'm looking to do is probably build a larger long-term position, kind of a bull market position for this, because it looks like it's going into a bull market. So any pullbacks, if I can get a pullback down to this trendline support, I'll add to the position, and we'll continue to build a bullish position in this, as and this thing could play out for, a bull market usually lasts years, so this is a longer kind of longer term position that I might just hold and let it just continue higher. So Etsy looks like a good short up around here. A couple things that I like about it. So on the daily chart, negative divergence right there on the RSI, and we had a bullish upward channel or trend line right here on the daily chart, and we broke. We got the sell signal right there. So that happened just the other day. Nice solid breakdown, a little bit of a kickback rally, and continued selling. So to me, this looks like we're going to continue down. Obviously, we can go sideways for a little while, but it still looks like we're going to continue our way down. And, likely going to go slightly, quite a bit lower. We've got some support. There's a gap down here too. But, I'll have to tighten it up. I've got some trend lines from the previous trade that I did on this, so I think those are probably likely to get some reactions on again. So we'll just extend those out, see how those play out. Looks like, support around 147. I think that's some more major support. You can see we held right in there as support. It broke, then it was resistance there, resistance there, resistance there. Then it broke with a gap up. So I think that's likely to be the first level of support around 147. Call it 147.25, and that's a move from where we're at down in about 15%. So yeah, I think we head down there. Here's an oil stock, XOM, up 7% today. That's a pretty big move for ExxonMobil. And it's a divergent high right now. So the new high price right here, you can see on the RSI, is on less momentum. So that's a divergent high. Now, if we go too much higher, we'll burn through this divergence, and it's going to be something like that, where we make, a new high in the RSI. But as of right now, I think we're likely to, this is probably likely to be the top area and hold us some major resistance for XOM. So I think we probably sell off from the price point that we're at right around here and continue down lower. So I'm watching for that. You see the PPO here also still a bearish crossover. Yeah, it looks like it's, pointed in the direction of making a bullish cross back over, but we don't have it yet. So everything is divergent, a divergent high right now. So Peloton still looks good. I think it's going much lower, and I'm positioned short on this one. The thing is that we're just getting a little pop today. So if you look at the 1 hour chart, it's only up about 0.5%, so pretty muted bounce. And, that's kind of expected. There was a gap right here. So you can see the gap. If I roll it out, we undercut the gap slightly, but then you get some dip buyers stepping in at gaps. So we could obviously continue a little higher, but I still think this looks good to roll over some more. Looking at the daily chart, we have negative divergence, a pretty big negative divergence on the daily, and that's typically good for a lot more than just this small drop. So I'd be looking for, some more downside, basically. Likely to come down and maybe fill this gap down here, although the gap's already been filled. But we do also have this thin zone where it looks like this thing just shot straight up. So I think we're likely to come down to, perhaps down around this area, which is about 118.40 or so. Maybe find some support down there. But in general, the technicals still look bearish crossover on the PPO, negative divergence on the RSI daily chart. And we had this uptrend line on the daily right there that was broken. Did a breakdown there, did a full back test while putting in a negative divergence, and now we're selling. So it's not going to go down all at once. You're going to have up days. You're going to, have sideways days. But I think in general, this is going to trend to the downside. I want to point out this momentum stock, QuantumScape. So this is the kind of stocks that have just been soaring last year in 2020. And this is where a lot of the retail traders have been putting their money. They jump on these kind of crazy high-flying stocks. But what happens is oftentimes you wake up to a big gap down. So if I look at the hourly chart, this thing was trending up. And, here's your hourly chart trending up for multiple days. Broke trend right here. You can see the breakdown wasn't that impulsive, though. It just kind of drifted lower. So if people weren't paying attention, they wouldn't realize that it really broke down. Started to get a little more impulsive right here. And then gap down, I think, yesterday about 40%. So you would have that's usually how these momentum names play out. They don't let everyone just exit the trade and say, okay, you made all your money, everyone can get out and make that money. That's not how it works. Typically, you've got to have some people that get trapped into the trade, and that's basically what this big gap down was. Gap down all the way to here, sold off. We're coming into resistance area. Obviously, could run up and fill the gap, but trapped all these kind of momentum traders all through here, and that's what happens to these things. So keep an eye on trend lines and look for divergences. Look for bearish PPO crossovers. You got looking at the hourly chart. There's your bearish PPO crossover right there, and that actually came back here on December 23rd. If you look at the daily, bearish crossover came here on December 28th. So that would have kind of started to let you know that trend reversal is likely. Also, you see negative divergence right there. That started to show up back here. Again, negative divergence isn't a reason to just get short. You want to look for other indicators. Bearish PPO crossover helps confirm. And then obviously you want to look for trend line, a break of trend line support. I didn't catch this one, but the short was really here on December 30th. That would have been the entry or trigger for the short. And obviously, big gap down. And, I'd be covering into some of these moves to the downside. Citibank, still short this one. It's just chopping around up here. You can see, we've tagged this trend line 4 or 5 times right up here at about 61.85. We're just trading slightly below that. So there's no catalyst yet for the downside momentum. There is bearish technicals on the daily. You can see here we've got negative divergence there on the daily chart. We also have a bearish PPO crossover right there. So look for signs that this is going to move to the downside. Obviously, we could pop and have a slight pop to the upside, but look for that pop. If it's going to run up and do a pop, look for that to be fleeting. Look for that to be faded. If it's not and it holds and you continue to build some support and then continue to move higher, then you stop out and get out of the thing. But it's very probable that we're going to get some sort of a pop, maybe an intraday pop or a gap up or something like that, and then look for what is the behavior at that point. Does it sell off? That'll give you clues that that's a divergent high and it's likely to roll over. So I still like it short on this one. And going back to the SPY, we'll look at the weekly. Just lots of short ideas is what I'm looking for right now. There's some longs, obviously gold miners and things like that. But again, I continue to use this longer term chart as my guide as to look for, whether to look for shorts or longs. I know there's a lot of traders that have this trend line drawn a slightly different to where we've recovered this bull market trend line. I don't see it that way. I still see us below that trend line. So we've got 2009 lows. We've got support here, and we're looking at a weekly chart. So every candle is a week. It's a long time frame. We held support there, held support through this cluster right here. And then we broke in 2018, and everything, all the price action has since been below that trend line. We've just been working our way higher, tagging resistance, sell off, run up higher. We're near resistance. So obviously we can go higher. We can run up and tag that resistance. We can overshoot it slightly and then fail, or we can just fail right here. Those are what I see as the highest probabilities. Obviously, we could recover it and just continue to move higher as well. That's a possibility. I don't think it's a high probability, but it's a possibility. So I continue to look for the trades that are, from my perspective, a higher probability, which would be to the downside. Given that we're really close to resistance, I'm more interested in finding plays to the downside. I think there's going to be bigger moves and more money to be made when stocks sell off versus trying to go long and catch, a smaller, kind of move to the upside. All right, we'll wrap it up here. Thank you all. I appreciate it. I'll catch you guys on the next one.